Inflation can be a real concern for retirees, especially if you're watching your retirement portfolio lose value while the cost of living continues to rise. Managing your retirement portfolio during periods of inflation is crucial if you want to protect your wealth and maintain your purchasing power in retirement. If you're wondering how to do that, you've come to the right place. In this video, I'm going to walk you through the strategies that can help you navigate inflation's impact on your portfolio. But before we dive into the specifics, if you're serious about protecting your wealth in the next 2 weeks, make sure to click the first link in the description. Thousands of Americans are opening gold IRAs to safeguard their savings from inflation and market volatility. I'll tell you why. This could be one of the best moves you can make. Now let's get into it. First, when inflation rises, it can significantly reduce the purchasing power of your savings, especially in traditional retirement accounts like IRAs or 401ks, where most of your assets are tied up in stocks and bonds. To combat this, it's important to look at assets that perform well during inflationary periods. One of the best options to consider is allocating part of your portfolio to gold or precious metals. Gold has historically been a hedge against inflation, maintaining its value when fiat currencies are devalued. Unlike stocks or bonds, which can fluctuate with the economy, gold tends to retain its purchasing power and can be a safe haven when inflation rises. That's why thousands of retirees are choosing to invest in gold IRAs. If you're looking to diversify beyond gold, another option is to invest in inflation-protected securities like Treasury inflation-protected securities, TIPS. These government-backed bonds adjust with inflation, ensuring your principal and interest payments keep pace with the rising cost of living. However, TIPS don't offer the same level of wealth preservation as a gold IRA, which has the added benefit of being an asset that is not tied to the performance of the stock market. Another strategy is real estate. Real estate tends to rise in value during inflationary periods, particularly in areas where demand for housing is high. But with real estate, you face some barriers, like high upfront costs and the need to actively manage your properties. Gold IRAs offer an alternative where you can gain exposure to real estate-related assets like real estate investment trusts, REITs, without the hassle. Now, let's talk about bonds. While bonds are a common part of retirement portfolios, they're also sensitive to inflation. When inflation rises, the purchasing power of the fixed interest payments that bonds provide decreases. As an alternative, consider diversifying your bond exposure by investing in shorter-term bonds or those that offer inflation adjustments. But again, nothing offers the level of inflation protection and stability that a gold IRA can offer. So how do you start? If you're looking to preserve and grow your wealth during inflation, setting up a gold IRA could be the answer. It's a simple process, and the best part is you don't have to worry about managing physical gold. Your gold IRA provider will handle all the logistics for you. By shifting some of your retirement funds into gold, you're positioning yourself to weather economic storms much more effectively. If you want to learn why thousands of retirees are choosing gold IRAs, click the first link in the description to get your free guide. It will give you valuable insight into how gold IRAs work and how they can protect your wealth from inflation and market risk. Now, if you have more than 100 KOs in your IRA or 401k, or even 5 MEP pluses in savings, this information is especially important for you. Protecting your wealth during inflation should be your top priority, and a gold IRA could be the best move you make to ensure your savings are safe from market volatility. Click that link and start securing your future today.